Welcome to Conscious Crypto. My name is Bass, and I'm a professional position trader focusing primarily on currencies like Bitcoin and Ethereum. In this video, we are going to take a look at exactly what that crypto crash was, as well as the technicals explaining how it was the third worst sell-off we've ever experienced, how it was different than any other sell-off we have experienced in the history of Bitcoin, and most importantly, where we are going from here. So if you're holding Bitcoin, trade Bitcoin, yes, pay attention. This will be one of the most valuable videos you watch this month because I'm not going to give you any fluff. I'm not going to flex on you. I'm going to tell you how it is from the best in the biz as an accumulation of all relevant macro data. First and foremost, we're going to look at Peter Brandt's recent tweet about Bitcoin and specifically campaign selling, not retail liquidation. So he said the nature of the decline in Bitcoin right now, 8 days of lower lows and highs, has all the fingerprints of campaign selling, not retail liquidation. And we are going to build upon this through the video to explain to you that this was unlike any other sell-off we've ever seen in crypto. And as someone who's been watching these charts for 6 years, the ups and downs, riding the roller coaster, I can tell you this sell-off felt different. It was so steady, controlled, and measured. I've never seen it before. So steady, so controlled, so measured, and without major volatility in both directions, but more so to one direction in a steady, controlled manner. So let's defer to Peter, who said, I've seen this before hundreds of times over the decades. Never know when, of course, this pattern ends. That's all we need to know. Here's James from Invest Answers to validate what we just stated, that this Bitcoin sell-off was unlike any other.
50% in less than 120 days. In the last bear market where we had terrible things happen, like FTX and all the scams and everything else, it took 180 days. It took half a year to fall 50%. We have fallen way faster this time around, which is interesting. Now, let's look at another chart. This is the 200-day moving average for Bitcoin. It's 103K. That gives you an idea of how fast we've fallen. 200-day moving average is north of 100,000. And we're now floating around 62,000, 63 grand. It is just literally fallen out of bed. The deviation from the 200-day is like nothing I've ever seen.
Now, here was something I was personally watching in crypto, the daily RSI. And you'll note I don't set my outer ranges at the standard 70-30. I set them at 20-80 because crypto has that kind of volatility. And those are the real markers of potential tops and bottoms. Now, this got to an unprecedented 14.9. The last time we saw this was 2020. And then 2018. So this is about as bad as the COVID crash, yet we had no macroeconomic headwinds.
Only the bear market bottom of 2018 and 2020, the C19 crash, had this level. So it's the third most oversold ever in the history of Bitcoin.
And these arrows here, I will highlight in our next video so you understand why there's a pattern to these tops down to the decimal. We'll talk about that in our next video titled The Only Chart You Need to Profit in BTC. Now, timing was the only aspect of this bull run that held true. Many other indicators of a top, euphoria, pi cycle top indicator, these things failed. What held true was the clock, the calendar, the timing.
The ROI from the low, and just seeing that like every single cycle peaks around the same time, right? Like they all peak around the same time. If you take this out to the lows, you can see how every single cycle, the top occurred basically within a couple of weeks of each other.
For now, we're going to take a look at the weekly chart. We have the 50-week moving average, the 100-week moving average, and the 200-week moving average. Now, historically, it is pretty clear to see a simple trend of closing below the 50, bear market confirmed. We don't get back above that with any significant closure, work our way to the 100, might hold support there, might fall through, holding support, fall through. And here again, holding support, falling through. But once we get this close, we don't get back above. And then we work our way to the 200. Here's an interesting highlight from Benjamin Cowan. And honestly, man, Benjamin Cowan is the guy. If you're going to follow anybody in crypto, follow Benjamin, level-headed. But as I always say, don't overconsume. Don't overconsume YouTube. And if you're in this game for the long haul, the less you can consume of the news, of YouTube, of Twitter, just stay off. It's not gonna serve you as much as it could hurt you.
So we closed below the 50. First week was the week of November 10th. That was final confirmation of the bear market. That was final confirmation.
Now, here's what's significant and Benjamin is highlighting is how fast this happened. These numbers here, historically, right? 22 weeks, 26 weeks, 29 weeks, 26, 29, and so forth. The close to touching around the 200, boom, same thing. This one, arguably close, not quite touched, but we did this in 12 weeks. Here's our close. Here's the bottom of this candle at 60K, 12 bars, 12 weeks. This wasn't random, but it was predictable. October, check the... So what I'm going to show you now is from Glassnode's chart of the week YouTube video. Now, I don't pay for Glassnode, so props to them. Please go join if you can afford it. Very valuable charts. Too much information for me. However, the NUPL, net unrealized profit and loss, is something I do actually appreciate because it gives you this simple color coding, right? Takes you back to elementary school where you just understand green is good, red is bad. Here we are looking at the major bear markets, and net unrealized profit loss shows you how many people that hold Bitcoin are in profit or in loss. Now, red is capitulation, as you can see here. Blue tends to be euphoria, greed. And that tends to mark the upper ends of the bull market. Now you can see that we get into red and we get severely into red. And over time, yes, this has been getting a little bit softer and a little bit softer. However, we have just now entered into orange and red. We are not close to what we are used to seeing in terms of capitulation in crypto. Now here's a quick demo of realized price. Realized price is simply the average accumulation price of people holding Bitcoin. So it shows you again where we are and whether people are feeling that fear of seeing all their profit disappear or potentially even losses on their Bitcoin purchases. Now, since we are so short-sighted, yes, these emotions are important. Very few have the ability to diamond hand it, to buy way back when and hold way into the future. And many people do not have this ability. So they may say, yeah, I'm going to get into Bitcoin. It's 2024. I just got a chunk of change. I got a promotion. So be it. I'm convinced. And then next thing you know, it's 2026 and we're back at 2021 prices. Certainly someone can feel like all of that hard work or that smart decision is now a dumb one. So let's take a look at the realized price and what Glassnode has to say about it.
So that means that on the whole, the Bitcoin market is essentially still 18% in profit. So you can see we're still about 18% above realized price there at 55K.
For you viewers with a short attention span, talking to you, Goldfish, we're going to go ahead and look at what the Bitcoin price has done around this purple 200-week moving average historically. And it has held up very, very well. Boom, as soon as it consolidates and closes below the 100, it goes pretty quickly to the 200, then begins to go sideways, building the bear market bottom. However, you will see it again and again. It will change. As you see in our last cycle, we did go below, even retest into it. And this is the whole idea of diminishing upside as well as diminishing downside. So it didn't get as high as euphoric as we might have thought. So therefore it had more room to come back down. And you saw it here dancing around beneath it. Now we are currently still sitting above it. So the likelihood is to say, yes, we might go below, despite sitting at what is considered great support. This doesn't hold as support or a demand zone if no one is stepping in, if the ETF don't get inflows, if long-term holders aren't reaccumulating, if these institutions aren't convinced and instead begin to sell. And honestly, we haven't felt enough pain. Here's proof of that from Glassnode.
So what that tells you is this current bear market, although it may have been painful for short-term holders, is nowhere near as bad as previous bear markets. The degree to which we have drawn down is not remotely close, and the degree of losses is not remotely close. So if this current bear market is to play out like it played out in the prior two bear markets or prior bear markets, we would likely go below realized price, or at least visit realized price.
Next, Benjamin Cowan speaking to balanced price and realized price. Now you can go look those up and what those mean, but understand what he's saying about price in bear markets and how it reacts to these.
After every euphoric top, Bitcoin first goes below the realized price, and then later it goes below the balance price. And when Bitcoin goes below the balance price, that is normally when Bitcoin bottoms. So Bitcoin bottomed in October of 2011. It bottomed right there in 2011 when Bitcoin went below the balance price. If you look at 2015, Bitcoin bottomed when it capitulated below the balance price. In 2018, Bitcoin bottomed when it went below the balance price. And then in 2022, Bitcoin bottomed when it went right to the balance price right here. Now on the realized price, the balance price back then was 15.65K. We know that Bitcoin went about $100 below that, maybe $200 below that. So every cycle, every midterm year, Bitcoin has ultimately gone below first the realized price, and then it goes below the balance price. I would say there's pretty good odds that Bitcoin would drop below the realized price, which is currently at 55K. And the balance price is currently at 40K.
Now, here's the one note I will make about the short term, which is, again, not for investors. And even in this level, maybe not for day traders. This is more of a position trader. The short-term review. Coming off our all-time high at about 126, we began to fall to 100,000. Of course, there's a psychological number there as well as some support. So we trended sideways and slightly up for about 7 days. Now, here's another psychological number. We dropped down to 80,000. This time, our consolidation was incredibly long, 54 days, going sideways until pushing up to almost 100,000, right around 98. Then we began to fall through. It took 71 days before we broke this $80,000 mark and fell to what again? $60,000. So folks, prepare yourself for potentially 2 months of sideways action or more or less. It is hard to say, but what is not hard to say is that this was immense and intense, and the market likes to mean revert. It is a law. In fact, the law of mean reversion is in play. And as noted earlier, we have fallen faster and harder than ever before. There is a strong likelihood that we don't see 60, maybe 55K, some wick below here, broken for a significant amount of time. But in conclusion, this is not likely our bottom. Potentially a good accumulation zone if you are a long-term holder and have those funds available and know that you will have more funds available in the future. But this year is certainly going to be a solid buying opportunity for crypto. And in my next video, I'll show you specifically when, based on historical results that are undeniable, based on the same clock that predicted this top, that predicts the bottom, we will look at when the best time to allocate a majority of your funds will be if you are still interested in investing in Bitcoin, which I understand you may not be at this juncture. With that said, this is Conscious Crypto. My name is Bass. Stay tuned. Stay calm. And go live your life. Put the charts down, put the YouTube down, put the crypto Twitter down. Go live your life. Cheers.